So in this session we are learning about what is working capital cycle, or working capital cycle also known as operating cycle. Okay, so operating cycle or working capital cycle refers to the length of time between the firms paying cash for material, that is entering into production process, stock and inflow of cash from the debtors. Okay, so basically working capital cycle is the time required by the firm to convert the cash back into the cash. Okay, for example, your cash gets converted into raw material, labor, right? You pay for raw material, you pay for labor, you pay for overhead costs. Then all this gets converted into work in progress, correct? Then this gets converted into stock of finished goods. Then finally you sell the stock. Some are sold for cash, whereas some directly get converted into cash, whereas some get converted into debtors. Okay, and finally when the debtors make the payment, it gets back converted to cash. Okay, so this operating cycle or working capital cycle is the time required from this to this, to complete this cycle from cash to cash, is known as a operating cycle. Okay, so if you look at it carefully, it basically indicates the length of time between companies paying for the material, entering into stock and then receiving the cash from sale of finished goods. Okay, so the operating cycle or working capital cycle consists of 5 events. Okay, conversion of cash to raw material, or conversion of cash to labor, conversion of cash to overhead cost. Then subsequently all this put together, conversion of this into work in progress, then conversion of work in progress into finished goods, then conversion of finished goods into debtors, right, through sales, and then finally conversion of accounts receivable, that is debtors, into cash. So time required for all this, right? So say if you invest rupees 100 today in raw material, the time required to get back rupees 100 back into the cash is known as working capital cycle or operating cycle. Now, if we look carefully, working capital cycle as such is a time which is required for completion of your net current asset cycle, right? So, working capital cycle is your raw material storage period plus your work in progress storage period plus your finished goods storage period plus your debtor cycle, that is for debtors how many days do you require to get the money back or to recover your money, minus your credit period which is availed from your sundry creditor. So it basically consists of the stock, then this is debtors, and then creditors. Okay, credit period availed from creditors. Okay, so debtors means your debtors collection period, that is time required to get the money back from the debtors. And stock is your stock storage or holding period of stock, that is on average basis how many days the stock is in the your stores or go down. Okay, say if your raw materials on an average are there for 10 days, then work in progress is there for 3 days, finished goods is there for say 5 days. Okay, then your debtors, they pay money after 60 days. Okay, whereas your creditors, their credit period is say 30 days. Then if you total it, it will be, so this net it comes to 48 days. Okay. So now we will see how to calculate the number of days, that is raw material storage and holding period, then debtors collection period and credit period availed individually. Okay, so let's see how to calculate this one by one. Now first we will see raw material. Okay, raw material. So usually the data given is raw material consumed and then average stock of raw material. Okay, so how do we calculate a stock holding period? Stock holding period. Okay, so what we do is, see, raw material consumed during the year is given. Okay, so let's say if raw material consumed during the year is 6 lakhs. Okay, and average stock of raw material is 50,000. Okay, so this year, beginning of year, end of the year, till beginning to end of year, 6 lakh is the raw material consumed. Okay, and out of which average stock of raw material is always 50,000. Okay, so if we divide this 6 lakhs by 50,000, we get 12. Okay, so it is 12 times that the inventory is replaced during the year. Okay, so 12 cycles during the year of inventory, or inventory that is average stock, which has been replaced during the year. So if you divide it in a year, assume that there are 360 days, so 360 divided by 12 cycles, so on an average you get 30 days. So 30 days is a stock holding period of a inventory of raw material. Okay, the second method in which we can calculate this is, what we can do is, to know the holding period, raw material storage period, okay, equal to average stock of raw material divided by average cost of raw material consumed per day. Okay, so that is, in this above case, it will be average stock of raw material is how much? Average stock of raw material is 50,000. Okay, divided by average cost of raw material consumed per day is 6 lakh. Okay, divided by, now 6 lakh is a cost of raw material for the year, or raw material inventory consumed for the year. So 6 lakh divided by 360 days will give you average cost of raw material consumed per day. So this is nothing but 50,000 divided by 1667. So it is 30 days. Okay, so the logic here is, average stock of raw material in rupees is 50,000. Okay, so to get what is the number of days for which the stock has been in the business, what you have to do is, you have to divide it by average cost of raw material consumed per day. Okay, so that you get the number of days, or the stock holding period for which the raw material is in the business. Now there is a similar way to calculate the stock holding period for work in progress. Okay, work in progress means that the raw material has been dispatched, but the goods are not yet finished. Okay, so they are in the process of production. Okay, so how do you calculate the work in progress holding period? Is average work in progress inventory. Okay, so you can calculate what is the average work in progress inventory divided by average cost of production per day. Okay, so in this case what you take is average cost of production. In case of raw material, it was average raw material which was consumed during the or average cost of raw material consumed per day, right? But here you take average cost of production per day. For example, say if work in progress inventory, okay, is say for 30,000. Okay, so 30,000, and then cost of production is, total cost of production is 5 lakh, okay, for the year. Then how do we calculate this? Work in progress holding period is work in progress inventory, that is 30,000 divided by average cost of production. How do we calculate? Per day total cost of production, that is 5 lakh per year, divided by how many number of days? 360 days. Okay, so it comes to 30,000 divided by 1388, so it comes to 22 days. Okay, this is the way you calculate stock holding period for work in progress inventory. The next is finished goods storage period. Okay, so finished goods storage period is average stock of finished goods divided by average cost of goods sold per day. Okay, now if you see, in case of raw material WIP and finished goods storage period, you always have to take average stock in the numerator, and then in the denominator, depending on what type of stock it is. Like for raw material, you need to take the raw material consumed, average cost of raw material consumed per day. Then in case of WIP, you have to take average cost of production per day, and in case of finished goods, you have to take average cost of goods sold per day. Correct? So now in our example, let's say if average stock of finished goods is 40,000, okay, and then cost of goods sold for the year is say 8 lakh. Okay, then how do we find the number of days? Is 40,000 divided by 8 lakh divided by 360, that is number of days, so that we get it per day. You can also divide it by 365. Okay, so but for convenience purpose, we are taking it as 360. You can divide it by 365 also to get a per day. Divide by 2, so that is 18 days. Okay, then you have data's collection period. Okay, so data's collection period is equal to your average book debts or debtors, Okay, book debts is average debtors divided by average credit sales per day. Okay, now say if your average book debts, okay, or average debtors during the year is 1 lakh. Okay, and then your credit sales for the year is 12 lakhs. Then your debtors collection period is 1 lakh debtors, that is the total amount of, divide by 12 lakh, that is total credit sales for the year, divide by 360. So that comes to 1 lakh divided by 12 lakh divided by 360. 3333.33. So this comes to how much? 30 days. 30 days. Okay. Now let's calculate credit period availed. Okay, it is similar to calculating your debtors collection period, that is average trade creditors or average creditors balance divide by average credit purchases per day. Okay, so let's say that average creditors is say 40,000. Okay, average credit purchases, how do we calculate? Let's say total credit purchases for the year is 7 lakhs. Okay, so average trade creditors is 40,000 divided by credit purchase for the year is 7 lakh divided by 360. Okay, so 7 lakh divided by 360. So that comes to 40,000 divided by 1944.44. So it comes to 21 days. Okay, so now in this example, if we want to calculate what is a working capital cycle, okay, working capital cycle. Okay, so what we have to do, storage period of raw material, WIP plus finished goods plus debtors collection period minus your creditors. Okay, so let's see all these values one by one. Okay, so raw materials is how much? 30 days. Okay, so I'll put it as 30 days plus 22 days is work in progress. 30 days plus 22 days plus 18 days is finished goods. So let's put this first. $30 days plus 22 days plus 18 days plus debtors. Debtors is again 30 days and creditors is 21 days. So plus 30 minus 21. So this comes to 79 days. So 79 days is the working capital cycle or the operating cycle. So this was all about your working capital cycle. Thank you.